Well, it's been about 5 minutes, which means everything has changed. Let me fill you in on what's happening in the DC real estate market. Hi, welcome back to another Coffee with Coleman, where we love to discuss Washington, D.C., business, real estate, all that good stuff. My name is John Coleman. I'm a real estate agent here in Washington, D.C. with the Jason Martin Group. Quick favor, if this real estate market baffles you, then go ahead and hit the like button. That is our local support for one another. And if you want to stay up to date on all things DC real estate, then go ahead and hit subscribe. You'll get alerted when I release new videos. Okay, so for the third year in a row, the spring market hit early and it is a complete, utter fist fight. We're seeing lofty escalations, waiving contingencies, and it's just some straight up tears, like straight up crying on the curb next to a house. I see you. It's okay. Trust me, we got you. So, a little recap. In 2020, things were on fire until, well, you know, that whole pandemic kind of thing kind of came about. Then in 2021, in spite of a pandemic, things were on fire. It felt like it was never going to end. And then here we are, 2022. We're feeling it again. I feel like 35% of my job at this point is a therapist for folks that should have a home and don't, which in itself is taxing for them, for me. I was never really meant to have hair, but if I did, I promise you, I would be tearing it out and losing it. So for your perspective, I think we need to look at a few things and take in some historical data, and then we'll wrap it up with a little bit of bow with what we're seeing in the months to come. Those main things: highlights of last year, interest rates, and cute pictures of cats and dogs. I promise you, at the end of this, we will include some little videos of cats and dogs to help you feel better about what's going on today. Because if there's anything that YouTube has taught me, is people love cute cats and dogs. So let's say we want to look at the last couple of years to help dictate what's going on now. Well, let's ignore 2020, because that's what we do with 2020. We just ignore it. In 2021, I mentioned it felt like we were at where we are right now, like bidding wars, crazy escalations, people figuring out different weird ways to be competitive, like naming children after the seller, like somebody would actually want that to happen. So the city is still popular, right? But there tend to be a little bit more premium of space. And I'm talking about like outdoor breathing space and indoor office space, because that work from home life was what we were doing. But it was the burbs that offered the things that were really important. Going to the office and going to the cool restaurants, less of a thing in 2021, although it started coming back in the summer. We knew that the spring was crazy. Well, how did that translate to the rest of the year for 2021? And then the summer hit. And once the summer hit, it actually started to feel like it lightened up. We were more in what I would consider to be a normal market, with spots where it was still super competitive, but overall as a market, it was not the same thing as that we were seeing in the spring months earlier. Condos were a different thing entirely, and you'll have to check out my video about that, but from September to 2020 to September to 2021, we actually saw a reduction in value of condos of about 10%. So those were taking it right on the nose in terms of value during that time period. Single family housing market held its own and did more than that. It ended up year over year quite well. The interesting thing that happened coming out of the spring and the summer is, you know, all these crazy sales that you see right now, and things were escalating high and two people were pushing prices way up. What happens once these properties start to settle is now the neighbors that are thinking about selling their house are saying, looks like they got this number down the street. We should list our house for about this price. And the thing about that is, it took a huge bidding war, and there's really only two people to get the price to that point. And so these people are then listing their houses for these crazy escalated numbers that they saw from the neighbors, and then not being so happy about the fact that they're not getting a crazy escalation too. But it's one of those things. You are taking advantage of this crazy market. It's just the market was a little bit crazier earlier, and you are reaping the benefits of those earlier escalations and expecting less of seeing those escalations as it goes on. And by no way, shape, or form am I saying these houses aren't selling. They were, it's just, again, they were not getting the level of activity. They weren't getting the crazy multiple offers that their peers were getting earlier in the year when they were listed at a lower price. We started the year off hot, and then maybe around summertime it's gonna cool off because these properties start settling. Maybe that's when we're gonna hit our cap. But that's where it gets a little tricky, because that's where the story changes a little bit. So fundamentally, what we were really seeing is buyers were hitting what we call an affordability cap. There's only so much money that somebody's willing to pay for something in a certain market. And at that period in time, buyers kind of threw up their hands and said, we're kind of tapped out about what we're willing to pay. Now, does that hold on forever? No. Look at this spring. There's gonna be new affordability caps that we're working with as we're going through it, but we're still filling out where those are gonna go. Perfect. Well, there's our roadmap for the year. You could just throw a dart in June and say, maybe that's when things are gonna start lightening up. Well, history never exactly repeats itself, but it sure does rhyme. And at the beginning of the year, we were dead on, but there's new factors in the mix which are gonna impact this timeline if it's gonna follow what happened last year. And that impact is interest rates. In case you hadn't heard, interest rates have risen quite a bit over a short period of time. As you examine the interest rates, seeing it up close and personal when you've been monitoring it on like a day-to-day, it's hard because you've been shopping and now your budget has just fundamentally changed. It's stretching what you're able to do. And if you are already competing and bidding on things that are at the top of your budget, you might not be willing to go up there where you were. And that sucks. I won't sugarcoat it, like that just is not fun. So here's the ironic thing is, for the past 2 years, what I hear from buyers is, can this market just chill out already? Like seriously. And in some ways, that's what we're gonna see is interest rates have gone up and they should chill things out a little bit. People are going to be a little less eager to be pumping hardcore money because the money's no longer as cheap. It's going to cost them a lot more to escalate that much higher, and they're already pushing their budget, so maybe they're not going to be pushing as hard as they can. I think we're already starting to see this in the market. Like, we are starting to see people list based off the prices of stuff that has sold in the past 4 to 5 weeks. And then now they're hoping for those numbers. And they're putting their properties up and they're expecting to set an offer deadline and get multiple offers. And it's just not happening right off the bat. And the general feeling is, if they are getting multiple offers, it's not 10 necessarily. It might be more 2 to 3, which means we're starting to work through what more inventory coming on, buyers' appetites being satiated, and now we're all of a sudden gonna hit a spot where maybe it's gonna be less of a fist fight, but people still have to wrap their heads around the fact that it's gonna cost them more money than they're anticipating. The last time we saw interest rates bump up about 1% over a short period of time, it didn't change that much long term. But in the short term, people paused. People pulled back. They got shell-shocked from the numbers that they saw on the page. But what ended up happening is people got used to the numbers. And so what I'm seeing right now is there's an interesting opportunity for a purchaser that wants to take advantage and is okay with the fact that the rates are higher. And if you want to know if the rates are going to go lower, I don't have a crystal ball, but I'm being told that it's unlikely that we're going to see these things pop down anytime soon. The likelihood is you could see them going higher. And if they're going to go higher, it's even going to crunch your budget a little bit more. And that's not to urge you to necessarily go out and just start throwing money at places. It's more of to say, manage your expectations. If you were afraid of it going up 0.5% now, it could very well go up another 0.5% and impact your affordability further. I think that this window for the next little bit is going to be a very interesting one. I think people, again, are shell-shocked from the interest rate hikes. They're tired from the bidding that they've been doing and missing out. And they're reevaluating what's really important for them. And if all those things combined, we're going to see some people pull back from the market. And if you're a person that can trudge forward, make it happen, this could be a great market for you. This could be the opportunity that you have been seeking. I feel like I'm in a great big pep talk right now, but I think that there's going to be opportunities here. And I would take advantage of them if I was in somebody's shoes right now. Although it is very, very frustrating. I'm well aware that the numbers are hurtful. Well, they're not hurtful, they didn't like punch you, but like they're real. They weigh on you a little bit. My message for sellers, be careful about using the new comps to list your house. There wasn't that many people that were willing to pay that top dollar. Their budgets are impacted, and you have to take that into consideration. And the reality is, we want to make sure that your place gets sold fast. So as opposed to, maybe you don't have to aim for that number they started at, but aiming at that number that they ended at might be a little bit of fool's gold. And so it's something you need to watch, because if you push for there and you're expecting multiple offers, you might end up being disappointed. All right, so that's what's in my head today. I did promise you some kittens and some dogs and some cats and all that stuff, so here you go. Don't we feel better now? It all looks great. All right, well, if you have any questions about real estate, buying or selling in the Washington, D.C. area, give me a shout. I'm happy to let you know what's happening in the market today, whatever day it is that you're actually watching this. And then if you need my contact information, I always put it below. And I just want to thank you for stopping by another Coffee with Coleman. Peace.